Tom summed it up perfectly. He really laid out the issues. We think the key right now in Kimberly is for the last 2 years, they've been very hit or miss. The last quarter was the first time in some time that they finally did a little bit better than expectations. They're controlling their costs a little bit better. Logistics are getting better. If that continues, we think the stock is going to be a good stock for the next 12 months. We're pretty cautious on consumer staples in aggregate, but we like Kimberly one of the best. It does have a 3.5% dividend yield, which is good. And we do think that even though it's at 22, 24 times earnings, that it's under earning because of the cost problem. So if they finally get their act together, we think it's got pretty good earnings leverage. We wouldn't buy today, but after the earnings release, we're very comfortable buying it here.
Yeah, that was a surprise for me, David, because, we talked about some of your hesitance with the staples more broadly, but I take your point about some of the stock-specific reasons here.
Yes, and if the stock disappoints and it does sell off by 5-8%, which it has done for a number of quarters, we would step in a bigger way because we do think on any disappointment they're going to get their act together this year, and we'd buy on the weekend.
All right, fascinating. Let's see if it holds for Abbott. David, stay right there. Abbott Labs is also before the bell tomorrow, down about 1% today. Saw a 6-year winning streak get snapped on a 22% loss last year, and they've beaten earnings estimates for 8 straight quarters, but they are, Megan, I know well, facing this DOJ investigation into manufacturing of baby formula. Welcome, Megan. What are you watching?
Thank you. Well, that is one of the things we're watching. Macro questions persist here, as they did this morning for all the earnings we saw with J&J. That was something people were really cautious about. But COVID testing is actually still a question for Abbott. Analysts are saying there could be a potential upside here as people are expecting those revenues really to have come down, obviously, with where we are in the pandemic. But could we see some upside in the fourth quarter? Of course, post-pandemic recovery in their medical device sector. That is something with J&J we saw a little bit soft today, although there is a recovery happening back to pre-pandemic levels in terms of the procedures people are having done. And then, of course, as you mentioned, the baby formula investigation, that coming out Friday night. The Department of Justice looking into the plant that makes that baby formula. We'll see whether the company says anything else about it in their release or on their call. We know analysts will probably be asking about it, whether they will divulge more and how much that matters to the stock as a key question.
Have we gotten any sense, as we were just talking the other day about Johnson & Johnson and sort of the legal there and how they've tried to deal with this. Has anyone kind of estimated the potential legal exposure that Abbott could have here?
I haven't seen anything along those lines, and there wasn't much of a reaction after that news came out on Friday about the investigation. So it's something I'm really interested in learning more about. How much of a risk really is this for Abbott investors? Or is it mostly just that the negative attention is going to continue, but it's something that Wall Street is really not paying that much attention to?
Sure, and that's going to be a major question for them to answer. All right, David, what do you do with the stock here?
So Abbott is a really well-run company. They consistently make their earnings. If you look at the earnings comparison between 22 and 23, earnings going to drop significantly because they're losing the COVID testing. So with earnings declining and the stock selling at about 25 times next year's earnings, this is a good company that's fully priced and we would pass. We do like Medtronic a lot better in the med tech area. That sells at about 15 times earnings with a much higher yield. So Abbott, very good business. But we don't want to own it.
All right, you stick with Medtronic. Fair enough. That brings us to last, but certainly not least, Microsoft. After the bell this afternoon, riding a 2-week win streak, had its worst year since 2008 during the tech wreck last year. They've topped estimates 18 of the past 20 quarters, seen shares rise 3 out of the last 4, but they've also just laid off 10,000 people. Steve Kovac here with more details.
Yeah, just a tiny $2 trillion company reporting after the bell. Yeah, just tiny. So look, here, Kelly, the mantra from Satya Nadella and company is do more with less, and that is exactly what Microsoft is going to be having to do itself. 10,000 employees got the axe last week. We know that already. We also know they're investing billions of dollars in Activision and ChatGPT. Now, things we're going to have to look for on the less side is cloud growth. Cloud growth is slowing down. Before, in quarters past, we would see, high 40 percentage points or in 50 percentage points in Azure growth. That's going to go all the way down to about 36, 37%, according to the Wall Street estimates. And look, that is because of so many headwinds facing the cloud business. You have foreign exchange, and you have this reduced spend from IT spend among small and medium businesses. That's what's hurting cloud growth. And then we got to talk about consumer demand, Kelly. Windows, PC, people are just not buying PCs the way they were during the pandemic, and that hurts the more personal computing business. That hurts Windows licenses as well.
The bread and butter.
The bread and butter.
For about 25, 24 times forward PE. David Katz, would you be a buyer of Microsoft here?
Not before the earnings, but tomorrow we absolutely would. We think this is a great long-term business. Management is really good. They're very focused on running the business well. They control costs much better than a lot of technology companies. They are confronting a lot of headwinds, so we're a little bit cautious going into earnings. We would wait and see until we hear what they say. But after that, we think for those that have a 9 to 12-month time frame, this is a really good buy. We're very happy entering here. The stock was about 120 points higher a year and a half ago. So you're getting that great business at a much better price.
Do you, David, like the mega spend on ChatGPT and the sort of the tack they're taking there versus, for instance, Facebook going more in the metaverse direction?
We think it makes an enormous amount of sense. It really positions them very well for the long term. If this artificial intelligence works on the search side, it repositions them and puts them in much better stead versus a Google. So we think this is a very smart business move. $10 billion is a huge amount of money. Relative to Microsoft, it is a manageable amount of money. So we think smart investment, and that's why we like management so much. They really are very focused and they're trying to get a bang for their buck.